Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 11, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have what's called another inside day. Inside to 2 days ago, we had an inside day yesterday and another inside day today, but yet still above all the moving averages, and therefore the big picture is the trend is your friend until it's not. Remember, we still have this trend line up here where the market will find resistance at that trend line. Above that trend line is just a stone's throw away from the all-time high made just last month. Of course, no change to the weekly chart above all the moving averages. The trend is strong. The trend is your friend until there's some kind of a reversal situation at hand. Net, no material change from yesterday in the SPY. But wait, there's more. Regardless of whether or not there's material change, is there an opportunity to make money in the market each and every day? The short answer is yes, there is. Here's an example. Traders will say, hey, Dave, is there a number in Tesla? We got a gap down opening. 345.15 was put on the board. She spiked it, bounced up, made a high of 349.37 just minutes later. Nice bounce. There's your 1%, give or take. How you doing? Here's another one. How about live cattle? We'll trade anything that's moving. Hey, Dave, do you have a number or a zone in live cattle? Sure, 195.475 down to 194.475. They came in, they spiked the first number, went to about the midpoint phenomenon, ripped it back up in the other direction. Nice trade for a day trade scalp with potential. How you doing? Another live room situation. Hey, Dave, Marriott's going lower. Do you have the next number down? Sure, 288.45. How you doing? 288.45, as you can see here. Low in this candle, 288.51. Low in this candle, 288.51. Sometimes they spike them. Other times they come up short. 288.45 is the same as 288.51. Again, how do you like them apples? What about TCOM, Trip.com, as it relates to, yes, the magic calculator? What if we zeroed in on this pivot high here, $74.15, this high? What if we took that number, 74.15, and put it in the magic calculator and hit calculate? I've already done it. I already knew the number. About 63.74. About 63.74. Let's come down to a 5-minute chart and you see what happened. First candle of the day, first few minutes of the day, they ripped it down, spiked it through, ripped it back up in the other direction. Guess what? Magic calculator strikes again. TCOM. You might have seen it. Got a promotion going on right now. If you sign up for a month of Inside the Numbers, I'll give you a month of the magic calculator. Play around with it. You'll be amazed. What about Inside the Numbers? How'd we do today? Did we have patience? Did we wait for them to give us the deal? And the answer is yes, we did. We had an early pivot today coming in at 603.65. Below opens the door for 602.40. Let's get some numbers up on the board. Now, below 602.40, another leg lower. We don't have to worry about that right now. But above the pivot, 603.65, the flip side situation, there's an invitation to run up towards 605, give or take. Now, let's get our faculties for a moment. So the market opened up, meaning the opening print 602.55. They dropped down real quick near 602.40. What was the low in the first candle? How about 602.43? That's 3 pennies short of the number. They ripped it back to where? The pivot. How do we know that's the pivot? Because it's in green. Look also what happened later on. They came back for a retest. It held. They had a bullish afternoon. Took them some time to eat time off the clock to go to the next place higher. But wait, there's more. Let's check it out as the morning edges on, or at least by 9:05, still long before the market's open for business. we're citing the pivot 603.35 and that 602.40 if they're above. The pivot becomes a target. You see right there. Now, watch this. As the morning grows on, you'll see all of a sudden we have 605.20 on the board. Now, what we're saying here is 604.80 is a gap. I don't worry about the gap. I told traders in the live room, everybody knows about the gap. Everybody doesn't know about the numbers that might exist above the gap. In this case, 605.20 is an important number that happens to be above the gap. It is overhead resistance. Now, just 23 minutes later, and there's your 605.20. It's overhead resistance. What does that mean? It means they're going to have a Dickens. Dickens is a technical term. They're going to have a Dickens of a time getting through it. And there's your run up to 605.20. And yes, traders in the live room shorted it. We were out of the money by a total of 2 pennies for about 1 second. That was it. Where did they go back to? Well, they went back to retest what? The pivot. Wouldn't you like to know this type of information? If you want to be a trader, if you already are a trader, if you're trying to make money trading in the S&P, options on the S&P, exchange traded products, futures, micros, it doesn't make any difference. They're directional trades. Wouldn't you like to know these numbers? I think yes. Can you really come up with these numbers without a little voodoo on the side? I'll let you decide. Pause the video, read the notes, go back to the chart, and double check the work. There's your base hit pullback from 605.20. The rest is trader's choice. You see what happened. 10:30, 605.20 is overhead resistance. There's your base hit off 605.20. The rest is history. What else exists inside the numbers? Well, we have stocks on the move. We have important support and resistance numbers for the day. There's a dozen markets here. Spiders, Qs, IWM, SMH, TLT, GDX. We have commodities, crude oil, gold, silver, natural gas, the dollar, Bitcoin against the dollar. What else could you be looking for? What's going on over in Camp IWM? Look where high of day today is. High of day is just at or under the convergence of the 20 and 100 period moving average. Below the moving averages, the trend is your friend, meaning downward. Back above, or at least inside of these moving averages, we'll go to neutral. We'll go to eating time off the clock like we were before, minus the dipsy doodle for 1 day. And therefore, we'll call this a bullish, flaggish situation if they can get back above the moving averages. If they can't, we're going to say that they're a little bit restricted and the downside is favored. It's a long week, but yet contained by the 100 period moving average on the weekly chart. Therefore, that's the 100 week moving average. The IWM is my favorite market leading indicator. Guess what? Down $1.32 today, or a little more than 0.5%. Leading meaning downward, meaning leading indicator. The spiders were up a little bit, flat-ish, less than 0.1% in the green. So we've got a leading indication from the IWM, but canceled out by the folks down at the transportation department that were up about 0.4% today. So we'll just call it a wash. However, they are below those 3 moving averages, only above the 200 period moving average, until or unless they can recapture all these moving averages and the last breakdown candle high in the sequence. They would go fill the gap and put them into, or back into, I should say, a bullish position. Might want to write this down. Your bogey on the downside is 16,200. Daily closes below 16,200. Irene's coming to dinner. What about the Q people? Any new revelation here? Any new developments? Qs were down $1.25 today, about 0.25%. We're not going to make a federal case out of it. What we're going to say is, above all the moving averages, trend is your friend. There was no material change on the Q chart. Likewise, for the financials, came in to take a peek at the 20 period moving average, bounced back away, finished up 13 cents, 0.25%. Above all the moving averages, trend is your friend. She is trying to establish a new high. Having a little trouble, but if you look at this from a big picture perspective, how about eating time off the clock around the former highs, building energy above all the moving averages? She's bullish. That's my story for the financial sector XLF. Looking at the weekly chart real quick, maybe a little extended from home base. What's home base? The 20-period moving average. As you can see, each and every time she gets a little bit extended from home base, she pulls back. They like to stay close to home base. It's like a kid riding his bike after school. Doesn't want to get too far because you got to come home for dinner. Each and every time she gets too far from home base, she comes back toward home base. Bounce off home base, gets a little far, goes sideways for a while. Let home base creep up the price or come back toward home base or a combination thereof. Garden variety market behavior. Any material change for Smashmouth, the Philadelphia Semiconductor Index? What they're doing is they're trying to creep above the convergence of moving averages. Turn it into the trend is your friend. For now, we're going to use this bogey. The high is 251.46. Get above, stay above, close candles above on the daily chart, 251.46. Of course, that starts intraday first. Close above 251.46, and another leg higher can ensue. She will be above all the moving averages, and then you have a tremendous area of white space, no man's land, up to the gap. That's like an ocean of opportunity. Will she creep up there? Will she get sucked up there? She'll want to go fill the gap in a bullish stance above all the moving averages in no man's land. Write this down, put it on a sticky note. How about a monthly chart? Is she just eating time off the clock, going sideways, letting home base creep up to price? When she gets to an on-time situation, will she take off? I'll let you decide. Monthly chart, smash mouth. Clearing up the daily and weekly noise. Look at all this noise. This is just back and forth noise. When you go to the monthly chart, you clear it up and say, she's just going sideways, eating time off the clock. Funny how that works. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.